Howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Tuesday, July the 12th, 2016, and I have the great honor and distinct pleasure of welcoming back to the show my good friend and colleague, Mr. Louis Cammarosano from smallgold.com. How you doing today, Louis?
Rory, I'm doing grand and happy to be on this legendary show today.
Well, I don't know about all the legendary part, but we've got a show to do, and we're going to cover the gold and silver sales for the past for June. So, if you're ready, we'll just jump in.
I'm ready to jump in, Rory. Let's do it.
All right. We are here today to discuss gold and silver and the sales from June from the major mints. Now, do we have Canada this month, or is that next month?
Not yet. No, you only get quarterly reports, and that second quarter's come out till August.
Oh, my goodness. So we got another 5 or 6 weeks before we get that. Okay. So, but we've got the U.S. Mint and Australia, and are we going to cover anybody else?
No, we're not. We only have the numbers from the U.S. Mint for June and partially July, and then we have Perth Mint for June. So we could start with the U.S. Mint. The U.S. Mint had in January, February, March, April, and May sold over 4 million ounces or 4 million 1 ounce American Silver Eagle coins, and in June that slowed down to 2.8 million.
That's a significant drop.
It's a significant drop, but it's still a respectable number. However, so far in July, the U.S. Mint has only sold 425,000 American Silver Eagles, and we're almost halfway through the month. So at this pace, the drop could be, as you pointed out in your recent article, Rory, about U.S. Silver Eagles falling off a cliff. They might be sub 1 million. And this all stems from the U.S. Mint front-loading the authorized purchasers with a very high ration of 1 million American Silver Eagles a week, which they all bought and they all have. And what's happened now is, and this is what I wanted to ask you about, is the sales have plummeted and the premiums have dropped, which indicates that the dealers are well stocked, and also indicates that what I call retail demand, at least in the United States, doesn't appear to be robust because the sales, they're not running through that inventory. And yet, during this time, the last 6 weeks, when the sales have dramatically slowed down, is when you've seen a massive increase in the price, which just highlights a point that Craig Hemke makes, and you can make it on both ends of the price going up and going down. Physical demand seems, and it's not that physical demand of American Silver Eagles dictates the whole game, because it's only 6, 7, 8% of the overall demand, but the physical demand has yet to rear its head as a real indicator of whether the price goes up or down, because physical demand has been through the roof the last 3 years, and the price went down the last 3 years. And now we're seeing the last 6 weeks physical demand appearing to slow down on the retail side, and yet the price continues to rise, and that's because of as Craig says, Craig Hemke over at Turd Ferguson, that the price is derived from the COMEX contracts, the paper contracts. And right now the sentiment appears to be good. So the price goes higher. So we haven't seen that decoupling yet of which I believe in, Rory, that physical demand will eventually override the supply demand dynamics, will override the false paper trades on the COMEX.
Well, we can only hope that happens more sooner than later. I mean, it will happen. It's just a question of time.
Well, even if it doesn't, I don't care if it doesn't happen and the price goes up anyway.
Yeah.
but that's not sustainable. Or maybe it is, because the price went down for years, even though the supply demand dynamic was in deficit for years. It still is. But that's not why the price is going higher.
Well, I mean, according to the doc, I mean, if you listen to he and Eric Dubin last week, I mean, he said that their sales are crazy, that they had one of the best weeks that they've ever had, if not the best week.
Well, that means then they're selling off the inventory that they have. So we may see a reversal of this American Silver Eagle deliveries to the authorized purchasers in a couple of weeks, where they start delivering more again as they work off that inventory.
Well, and that's what I was saying in that article you pointed out that, obviously the authorized purchasers are their shelves are still full.
Hmm.
I mean, otherwise you wouldn't have zero Silver Eagles sold on Friday, July the 8th. Zero. They sold none. I mean, how that to me that's huge. That's a huge signal.
Sure, because when they report, they generally report. They don't always report American Gold Buffaloes and the America the Beautiful coins, but when they report eagles, they report gold and silver eagles, and there's always more silver eagles sold than gold eagles on any given day that they choose to report. But they chose to report on Friday 2,000 American gold eagles and no American silver eagles.
Zero.
And they're at 4.25 right now, 425,000, which is not very much.
That's not very much. I mean, and that as you and I have discussed on numerous occasions, and I have stood by no new record for
Right.
American Silver Eagles. That is in full view at this point.
Mhm.
That
But
is. Go ahead.
what is driving the price higher, as I mentioned, I sent you charts on the silver open interest is at all-time highs on the COMEX, people trading silver. And then the silver ETF demand, there's been a big boost. And both the ETFs, the gold and the silver ETFs, have seen supposedly massive inflows. Now, I don't know how they somehow managed to get these mega amounts that they report flowing in each day. I don't know where they find that amount, but supposedly that's what flows into the ETFs. And the ETFs and the COMEX open interest, they're on fire. But the sales, the retail sales, and that's what I want to ask you: what the difference when you're saying retail sales? Are you talking about including Asia? Because I would agree there's some good retail sales, but there's always been good retail sales the last few years in China. They're a little slower now than they were the last couple of years. India is slower than it was last year. Japan is up, Europe is up, but what I'm saying is I'm not seeing the surge into the physical metals as much as I am the surge into the open interest on COMEX and the amount that's supposedly flowing into the silver and gold ETFs.
But I don't personally. I don't really pay very much attention to the ETFs because they're fraud. I mean, these are fraudulent instruments. So if they report, I mean, how, like you said, Lewis, how do you acquire, what was it, 18 tons of gold in one day?
Right.
Physical
Yeah, they
gold?
don't.
That
Right.
you don't do that. I mean,
But you see, unfortunately, that is where the money flows today. There's
and
a lot of money flowing in there, and it's not flowing into the physical markets because if we go over to gold, the U.S. Mint it sold 60,000 ounces of gold in the form of American gold, 1 ounce gold eagle coins last month. That's basically nothing. You would think where we are in the whole scheme of things, with all the global uncertainty, that they would be selling hundreds of thousands, and they're not. But if you look at the amount of money from Druckenmiller and Singer and Soros and all these hedge fund managers, when they buy gold, they're either trading COMEX contracts or they're pouring into the ETFs.
right.
And that I think is that's kind of a tragedy because
Yes.
it's a way I think that they manage to keep people away from the physical and to keep that physical supply dynamic from getting out of hand, from there actually being a shortage. Because if you can satisfy people with the price exposure to gold and silver, then they're happy and then they don't want the gold and silver. But you see, I don't know if you saw it, I did one on gold ETF shares provide exposure to the price of gold, but not gold ownership. And, if these ETFs go bankrupt or mismanaged, you're out. You don't have a claim. If you have supposedly 10 ounces of gold in there, you don't have 10 ounces of gold in there. You have a claim on the trust, which means you get nothing. You can't take physical delivery, even if there is no bankruptcy. And if there's a bank holiday, you can't trade the shares. But this doesn't seem to matter to people, Rory.
No, they could care less.
This is where the money is flowing, though. And there's options like gold money, where if you want digital gold, but at least it's in your name and then it's an amount of gold that's yours, you could trade that instead. But people seem to like they're heavily promoted, these gold ETF shares.
And it is a shame. I mean, because people believe that they have gold. believe that they have silver when they have these exposures to these ETFs, and they don't, because the way that the prospectus is written, it's a fraud. I mean, they're fraudulent instruments.
In fact,
Period.
they even admit that
They
they
even
don't
admit
call
it.
they don't call it fraud. They say that this is a feature of these instruments is that they provide exposure to the price of silver bullion, a way of participating in the gold market without necessarily taking physical delivery, as if that's a good thing.
Right.
I mean, that's in the gold share. The GLD says you don't have to take physical delivery. You can trade and sell this on a regulated stock exchange. And we can give you access, and you don't have to worry about custody, transaction costs, which might have prevented you from buying gold. And on the silver ETF, SLV, it says we provide you the day to day movements of price of silver bullion without you having to take delivery. Now, they
Well,
call that a
and then
feature. I call it a flaw, not a feature.
it goes on to say that you have to have X number of ounces or dollars invested in it before you can even be considered
Yes.
to be able to make a claim against anything physical.
And there are some.
And then it's up to them whether or not do
Yes.
you give that they actually deliver on that.
They have to create what's called a basket, and that basket has like tens of millions of dollars worth of metal supposedly in it. And at that point, you're discouraged from even bothering to take, because if you really wanted to buy physical metal, you wouldn't go to an ETF and then hope they'll create a basket for you when you want. And you wouldn't buy a COMEX contract and hopefully stand for delivery if you know there's nothing to stand for. You go out and you buy that amount. But unfortunately, these people, other than what's his name? Bass. What's his first name?
Kyle Bass.
Kyle Bass. Other than Kyle Bass, who kind of figured out that COMEX may not be able to deliver the gold, he actually arranged, it took him a while. He didn't just trade it one day, stand for delivery and get it. He arranged to have his gold contracts settled in physical gold and then stored. But in retrospect, what he should have done was not even bothered with that, because there's the uncertainty that they won't give it to you, is you go out through a broker and you buy yourself the requisite amount of gold or silver that you want, and you have them vault it, or you arrange your own vaulting.
Exactly.
But that isn't happening, unfortunately, because all of this last 6 months, the big money is moving into gold. In the West, the big money moving in is all in COMEX and ETFs. I mean, the gold sales at the U.S. Mint are pathetic when you think about how much gold supposedly is being traded, bought, and so on. 60,000 ounces of American gold eagle coins. I mean, it's up from last year, but that's nothing.
Yeah, that's
Russia
nothing.
supposedly, Russia can add, China added, the People's Bank of China added 400,000 ounces in a month. Russia adds sometimes 1,000,000 ounces a month. So supposedly, if U.S. Mint represents what Americans are buying, and they're buying 60,000 ounces, that's nothing, and that's up from last year.
Yeah, it's like a day for China or Russia. One day.
Right. So what Americans are doing is they're buying. I don't think the average American is buying COMEX contracts, but they clearly are funneling money into SLV and GLD, the newbies. And I think what's happened, Rory, is perhaps the stackers, when the price rose, a lot of them stopped. They bought while the getting was good the last few years. And now the new money that comes in isn't necessarily, I mean, I'm sure there is some new money, and I'm sure it's increasing, but the vast amount of the new money is going into these paper products.
I would like to think that, a couple months ago, you did that whole dissection of the typical American investor, and you broke everything down and showed the 401k and the money that goes into there, and versus these folks adding one silver eagle to their portfolio a month, and then two silver eagles, and right down the line up to, I think it was 6. If we can just not capture, but if just a very small percentage of those people come into the market and say, well, I don't really trust the ETFs. I don't really trust the stock market. I know the stock market's a lie. Then those people move into physical metal. And I think that we're going to see that. I think we're already seeing that in the fact that there were 60,000 ounces of gold, American Gold Eagles sold last month. And as you pointed out, the veterans, they're already stacked up. I mean, yeah, they're adding a little here and a little there, but as far as the new money coming in, they're still, that may be what is, this whole 425,000 ounces of American Silver Eagles that sold this month. That may be all the new money coming in. We
It
can
could
only
be
hope.
right. And if you remember in the example that you and I went through, where a small percentage of the U.S. labor force buys a small amount of silvers, it didn't require much.
Exactly.
And that's what they're worried about. The reason that ETFs and COMEX is so hyped is they want the new money not to flow into, because in our example, if new money flew into the physical, it would overwhelm the market. They wouldn't have it to deliver, because in one of the examples, if 2 or 3 or 4% of the U.S. labor force bought 6 coins a year, you're talking about hundreds of millions of additional ounces of silver being sold in the form of American Silver Eagles. There's only about 450 million ounces worth of investable silver that you can actually buy out of the mining supply, because the other half goes to industry. So it would clearly overwhelm it. So they're very happy now that if the price is rising in paper, that it's rising because of paper, and it's encouraging more people to buy paper. Because if I would have expected, if the price rose, that people would be more interested in grabbing the physical, but they don't want that to happen, because, and it's kind of ironic that as the price rises, we're not seeing the physical rush, we're seeing the paper rush into ETFs and COMEX contracts. Because as I said, the amount of supposed gold held and silver held in ETFs is at an all-time high, and open interest on the COMEX in gold and silver is at an all-time high. But we're not seeing the real push in demand on the physical side, at least in terms of what I call retail, which is the U.S. Mint and the Perth Mint. We didn't talk about the Perth Mint. The Perth Mint did have a good June, 1.22 million, I believe it was sold, which marked the ninth out of 10th month where they sold over 1 million ounces of silver, largely due to the sale of the Australian silver kangaroo, which opened up at, I think, 3.5 million in its first year in its first month in September 2015. But in context, that's a great increase. I think it's a 217% increase from June this year to June last year. But 1.2 million ounces is not, I mean, the U.S. Mint was selling 4 million ounces. So it's good for the Perth Mint. Law of small numbers, it moves it up. But in the grand scheme of things, that doesn't represent a real surge in overall, even coin demand, 1.2 million ounces, if there's, let's say, 890 million ounces mined each month. I mean, mined each year. So it's that means that the Perth Mint will do about 12, 15, 16 million ounces this year. It's a good number. But what I'm saying, if we're in a mania and the price is rising and there's all this interest, you'd expect them to be at 4 million, the U.S. Mint to be selling 10 million ounces, and it's not happened yet. And I think it's unfortunate. They've managed to convince people that if there is going to be a mania, they move it into the paper,
even though there's nothing there.
Well, what's there, and it highlights that people want dollars. They figure, oh, I'm rich. My gold ETF went up, my silver ETF went up, and I can trade it. And I think it's marketing. It's definitely marketing. It's form over substance, because you could do the same thing with gold money. You could do the same thing with Bitcoin, which is the same thing, or a bullion vault. You could digitally buy and have allocated to you gold and silver through those types of companies. But those companies are not traded on Wall Street. In fact, that's their advantage. That when the banking system is closed, or even on the weekend, that platform is still, those platforms are open. You can trade, buy, and sell your gold 24/7 in many instances if there's someone else on the platform who's active.
And it gives you access to physical metal.
It does, but it's not the best way to buy physical metal, because
no, it's not. But at
least you could get it.
Exactly, that's my point.
Right.
Is that through BitGold and Bullion Vault, you still have access to physical metal, whereas the COMEX and ETF, it's highly questionable, if not impossible, to get physical metal. Probably not going to happen.
Well, especially for the small retail investor, the amounts that you have to be even eligible to try to get some are ridiculous. And it's the same issue with the COMEX. Most people, as we know, aren't there to take delivery. But even if they want to take delivery, the numbers show that they might not be able to. So why would anybody in their right mind who wants physical delivery buy these ETFs or trade COMEX contracts? And the answer probably is they don't want to take physical delivery. They're satisfied with the price
and nothing more.
and then that's it. And they're marketed that way.
Well, it'll be interesting to see what happens with the U.S. Mint come the end of July. And I know you keep close tabs on that throughout the month, Lewis, and certainly appreciate you doing so because it keeps us all informed to the reality of what's going on. I mean, and it's kind of a reflection, but in a way, it's kind of a skewed reflection of what's going on because there's so much more privately minted rounds and bars and so forth that are not counted in what we're doing right now, and
Probably an equal amount of privately minted silver rounds and bars to what we report at the big four, which are the U.S., Perth, Canadian, and Austrian mint in terms of silver sales. That amount is about 200 million ounces a year, maybe a little more, which is about a quarter of the overall silver demand.
And I would think that the private rounds and bars is at least double that. I mean, from everything that I've learned over the
That's
past
what I'm
few
saying.
months,
Yes.
I mean,
Yes.
it's incredible
Yes.
the sheer volume. And
if the private mints last year did 100, I mean, the sovereign mints did about 125 million last year. There was at least that amount done by the private mints. And then this year, even though we have a slow July and a slower June, they're still on pace ahead of last year's record year. So this year, sovereign mint sales are going to be about 25% of the silver mining production because they're going to be in the 200 plus range when you include the private mints as well.
it's a lot. It's a lot of product.
When it used to be, as we talked about before, only 5%. So there is an increase. Don't get me wrong. I'm just saying in this little micro period that we're looking at these last 6 weeks, we haven't seen a surge. We've seen a decline off of the highs of the retail demand, when I would have thought that now that things are getting rolling and you're seeing higher prices, that you would see these increased sales. But it could be we are seeing increased sales, as you said, but they're running off the inventory, which means that sales weren't as strong earlier in the year. They were strong to the authorized purchasers, and now they're running down that inventory.
Yep. And the next couple months are going to be very interesting. I'm sticking to my guns.
I think you're right.
No new record.
Nope.
Because that doesn't serve the powers that be. It's the only reason.
And no shortage either.
And
that's
no
why
shortage.
they're well stocked, because the last thing they want are two headlines: record sales and there's none to be found. That would drive people into the physical. But as long as physical is plentiful and people believe it's plentiful, they will buy the ETFs as opposed to the physical. Once they find out there's no silver to be found for you to buy, then they start to doubt what's in the ETFs.
Excellent point. Well, Lewis, I think we've given them quite a bit to chew on there, and it's we'll pick it back up in a couple of weeks when we get the national numbers for Russia and China, excuse me, Russia and China and India, and get those numbers rolling in, and we'll report back and see where we stand.
Sounds good, Rory.
All right, buddy. Well, I certainly appreciate all the time, and we've been speaking with Louis Cammarosano over at Small Gold, and that's SMAULGLD.com. Louis, thank you so much, and we'll speak with you soon.
Thanks, Rory.